I'm going to show you a strategy so simple that even a beginner can get funded and get payouts from. This strategy is so foolproof that I debated if I was going to even release it here on YouTube. It's stupid simple, yet it made me $3,000 per day. It has a high strike rate and very little criteria for us to follow. And that is why it's so foolproof. Not only am I going to share with you the entry criteria, but I'm also going to backtest it so you know exactly how I'm executing on it. So without any further ado, let's go on to the charts. The pair we are going to be trading is going to be NQ. The reason why is because it's the pair with the most predictable volatility, and you'll see that from criteria number 1. The time frame that we are going to be trading is going to be the 5-minute time frame. Very consistent. We look at one time frame, we do some multi-time frame analysis, but our execution is always on the 5-minute. The strike rate you can expect on this strategy is 80%. It's a very high strike rate, and that's why it's so foolproof and even a beginner can get funded with it. And the criteria is very simple. We wait for 9:30 a.m. Eastern Standard Time for the market to open. Then we are going to go and trade in line with the daily bias, which is either going to be bullish or it's going to be bearish. So when the daily bias is bullish, we are only going to be looking for longs, and when the bias is bearish, then we are only going to be looking for shorts. Then we are going to identify the high probability sweep that is going to go in line with our daily bias, be it bullish, be it bearish. Meaning that if our daily bias is bullish, we are going to be looking for a low to be swept and then for the next criteria. And if the daily bias is bearish, then we are going to be looking for a high to be swept, and then we are going to be looking for the rest of the criteria, which is we are going to wait for a 5-minute market structure shift. This is what is going to give us our entry. So we execute at market. Our take profit is going to be 1 to 2 risk to reward. It's a very respectable take profit. With a 1 to 2 risk to reward, you only need a 35% strike rate just to break even. So once again, this is how foolproof this strategy is. And last but not least, the stops are going to be below the low or 75 handles at maximum. So the theory is very simple. We wait for 9:30 a.m. open. We define the daily bias. Okay, let's say that we are bullish. We're going to be identifying the low that we want to be swept. Then once the low sweeps and we have the market shift, we execute at market order and then we target 1 to 2R. It's very simple, and I'm going to show you exactly how to apply it on the charts. It's so simple, yet it made me $3,000 per day. And if you don't believe me, here's a bank screenshot with all of the payouts processed. So let's get into the back testing and let me show you exactly how we execute it. So first things first, we are going to wait for 9:30 a.m. Eastern Standard Time. But while waiting, we can already identify the daily bias, and we can already see that we had a very nice V-shaped recovery on Nasdaq, and therefore our daily bias is going to be bullish. We are looking for the market to come towards the high, we're looking for the market to come towards the extreme, and so on, so forth. So let's go down to the 5-minute to 9:30 a.m. Eastern Standard Time. So this is 9:30 a.m. Eastern Standard Time. We have already defined our daily bias as being bullish, and one of the things that we can also identify is the market has pulled back towards a high value area, which is a higher time frame order block. So since we've seen that the market is at a high value area, I can already see that the market has swept the low. And yes, that is great, but what I also want is I want at least an internal low to be swept. Why? Because this is going to create market manipulation. We already understand that the daily bias is bullish. So therefore, what we have to look for is at least an internal low to be swept so that traders think that the market is moving bearish. And that's when we execute. So we can see market open, we moved very bullish. So at this point, traders think the market is going up, the market is going up. They start longing, and then we start having some very strong bearish manipulation. We sweep the low, and then what do we have? Instantly a 5-minute market shift. So after this market shift, so let me put the market shift right where it's supposed to be. When we have this market shift, we create this new order block, we set the entry, we set our stops at below the low that created the sweep, and we are going to target 1 to 2R. That's all we have to target, because the beauty with Nasdaq is that it moves a lot very quickly at very predictable times. So we enter at a market order, the market moves lower, very wiki. You just let the market do its thing. You don't manage the trade. If you want to manage, then you have to manage 3 PD arrays back, but I would recommend you not managing this trade, and then eventually the market goes back to the order block and into the take profit. One of the rules, it's very, very important, which is one and done for the day. If you take one trade, whether it's a loss, whether it's a win, you just move on to the next day because you don't want to risk the probability of you starting to overtrade. And if you think that that's you, if you think that you have a very high risk of overtrading, don't forget Trade Blocker is here to help. The link is going to be in the description. But let's move on to the next day. Okay, so as you can see, this was yesterday's trade. And now what we see is that the market is pretty much moving lower. And the closest target is the low. The daily bias continues to be bullish. We've seen that the daily bias is bearish from Monday, and on Tuesday it remains the same. And since there's no close low to be swept, I think these lows are very, very good to be swept, and that's where I want to see the reaction, and that's where I will enter. So let's see. The market moves up. Once again, same as yesterday, it's just manipulating traders thinking that the market is going to move up. Then we have the market reversal. I clicked a little bit quickly, but there you go. This is our trade because we have the engulfing candle, and then we target for a 1 to 2. So let's click on buy. Stop loss is below the low, and the take profit is above the high. Market moves to the upside, and eventually it results in a beautiful win. So there you go, that is a 1 to 2 risk reward. And everything that we're looking for is key levels for the market to react from or sweep. And then from there on, we just wait for the 5-minute market shift, which is enough to give us a good risk reward, right? So let's move on to the next day. So the daily bias, as you can see, remains bullish. We are coming into the volume imbalance, and it's clear that the market wants to continue moving to the upside. We're always having strong reactions once we hit a higher time frame PD array or we sweep a low. So the daily bias remains bullish. And if you want me to make a full video on a strategy that does not require daily bias, then let me know down in the comments. So here we are at 9:30 a.m. open, and once again, what can we see? There's no close lows to be swept, so we are going to want to sweep these lows and even possibly these lows right here. So let's see when we sweep, and then we will look for an entry. Keep in mind, this requires 5 minutes of your time before the market opens to identify what areas you want to be swept, and then you just wait. You can set your alerts and go about your day. Notice once again, market moves up just like every single time. The market moves up just to manipulate traders before going to the point of liquidity. So the market moves up, moves all the way down. We have no strong market shifts. And then at this point, there was no market shifts. It's already getting late. If I am not mistaken, this was FOMC day, and we don't really trade on those specific days. But as you can see, there was really no sort of entry. So let's move on to the next day. What is the daily bias? The daily bias remains bullish. We are still respecting the volume and balance. We are still sweeping the low and impulsing up. So therefore, daily bias remains bullish. So this is market open. So let's identify once again the lows we want to see swept. So there's a very clear low, and there's also, if we want to go a little bit deeper, we also have this low. So let's see how the market reacts. The market opens up, goes for the first low. This you never really want to see a solid close below the low. Usually, if they are not instantly reversed on the next candle, that's usually a red flag. But let's see how the market continues. Okay, we are very close to this low. Okay, now we've swept it. We are starting to see some bullishness. Okay, no market shift yet. I want to see a candle close above. Still nothing. There you go. This is why being able to identify a market shift is extremely important. You always want to see a body candle closure, else you would have been tagged out right there. And here you go. This is the market shift that you want to see. You set the market order. Stop loss is going to be maximum 75 handles because 150 handles take profit is already very good for NQ. You don't want to extend your take profit much more than that. Then you buy. Stop loss is going below the low. Take profit is going at 2R. And then very, very quickly, the market moves in the direction that we forecasted, which was in line with the daily bias. So notice how market shifts were very important. You always want to see a candle closure above, and then you want to see the market going for 1 to 2. You are not aiming for much more. Yes, the market can continue going, but 1 to 2 is foul proof, because like that, you only need a 33% strike rate in order to be a break-even trader. If you want to check the strike rate calculator out for yourself, it's a free tool. It's on a website. I can just link it in the description. But let's move on to the next day. So once again, the daily bias remains bullish. We want to continue looking for the longs, right? We want to continue targeting this high. So let's see if we still have another long to take towards that high. This strategy works no matter if your daily bias is bullish, no matter if your daily bias is bearish. You will always see strong indications of where the market wants to go, and only then do you execute. That's why this strategy is so foul-proof and so profitable. So we are back at market open. Obviously, the lows that we want to see being swept are these lows. You also have these lows right here, and obviously the bigger lows. There's also the possibility that the market just reacts from the internals, but with this big wick, I would be very, very careful. Okay, so we go for the low. Now we want to see a strong market shift. Okay, there you go. Strong market shift. 75 handle stop loss, 150 handle take profit. You buy. Stop loss is at 75 handles. Take profit is at 2R. So let's see what happens. And there you go, you got swept out, which is perfectly fine. So what you can see is that this is a very mechanical strategy. This is a strategy that so many traders have already used to become funded. And you can see how mechanical, you can see how simple it is. And this strategy has made me thousands and thousands of dollars. So I encourage you to backtest this strategy and use it for you to get funded and get multiple payouts. Don't forget, once you get your payout or once you get funded, don't forget to tag me on Instagram, or just let me know with an email. So it's a pleasure being able to share these strategies here with you. If you want to become a consistently profitable trader, and if you want to get funded this year, then make sure to sign up for the waitlist of Funded Trading Blueprint. I'll see you inside, or I'll see you when you're funded.